Informative. This is the topic we were going to discuss tonight about calculating Zakah on modern financial assets. So it's a topic that we could probably do a whole half-day seminar on, and I'm going to try to condense it into about half an hour so that we can at least digest it and then hopefully eat as well, not keep you here the whole night. But inshallah, we'll get started, and inshallah, I'll leave time at the end for questions and answers. So just to give you a little bit of background on who I am and where I'm coming from, I work with a company called Azzad Asset Management, and we're based out of Falls Church, Virginia. We have clients nationwide. We serve mainly American Muslim population, both individual families, small businesses, and nonprofit organizations, helping them with their financial needs and their endowments. We're an investment advisory company registered with the SEC, so we are very much mainstream. We have 2 mutual funds that are available publicly on many of probably the platforms that you are already investing through. And the 2 funds that we have are the Azzad Ethical Fund and the Wise Capital Fund. And I have more information. I'd be happy to talk to you about what those are as well. And so we are, alhamdulillah, very fortunate in that we actually, as a company, get to come out and meet with different communities, talk about different ideas, and inshallah hopefully share some of the information that we've been able to gather and help our clients with so that you can benefit as well. So one of the unique aspects about what we do is, of course, there are many financial advisory companies out there, but what we really focus on is making sure that all of the investments that we do, the services and products that we provide, that they do follow Islamic principles. And this is really an area that Islamic finance has grown tremendously in the past few years. We are actually a part of also the Forum for Sustainable and Responsible Investment. And in addition to that, for the Islamic guidelines that we follow the guidelines. These are international guidelines that are issued by AOFI. And AOFI stands for the Accounting and Auditing Organization for Islamic Financial Institutions. So I wanted to set this up because, of course, many of us come from different backgrounds, from different schools of thought. But at the same time, when it comes to certain Islamic principles, especially investments, what we should do with our money, there's quite a bit of consensus in this area. So this is where we're coming from and how we gather the information that we use in our products and services and the information that we provide. So today, inshallah, we'll be talking about zakah. We just finished the month of Ramadan not too long ago, so this was a topic that was on many of our minds. And again, if any of you filed a tax extension deadline, also you probably just wrapped up your taxes. So both of these topics have something somewhat in common. They can both be challenging to calculate. And while one of them from a tax point of view is something that we focus on because, of course, it's a legal obligation here, zakah at the same time has a lot of unique characteristics for us, especially as Muslims. There's, of course, the religious aspect of it and the spiritual aspect of it, of cleansing our wealth and providing for the poor. And of course, there's many different places and sources where we can look and see why zakah is important, where Allah subhanahu wa ta'ala tells us what we should do with our money. And so this is an area, of course, I'm going to leave it to our scholars and to our imams, because again, there's a lot of spiritual benefit. But really what I'm here to do is, not as a scholar, but more as a financial professional, talk about how we can really calculate the zakah so that it is correct and we can make sure that we take care of this obligation correctly. So again, the places where I'm getting this information that I'll be sharing with you, one is again, AOFI, which issues actually international guidelines. There are standards on zakah, and I'll show you a list of their board members next. And in addition, Dr. Muhammad Adam Sheikh, we work very closely with him. He is a part of the Fiqh Association of North America, and he's also on our Shari'ah advisory board. And alhamdulillah, we're very fortunate to be able to work closely with him. And he really is the one who goes through our products and services and makes sure that, again, we're following these standards. And this is a list of all the AOFI board members. And I listed this here just so you can take it. It's very small print. But just so you can see, these are really scholars that are specialized in this area. So no longer is really Islamic finance something that we have to say, okay, who is your scholar, who is my scholar, what is your madhab, what is my madhab. You know, alhamdulillah, we have organizations like this that are issuing international guidelines. So on the agenda today, we want to talk about what is zakah and why, just go over some of the basics. We'll talk about what assets is zakah due. Do you have to pay zakah on everything? Applications of zakah. We'll also talk about the zakah of securities accounts, because again, with modern finance, we no longer just own land and gold. We have stocks and bonds and mutual funds and retirement accounts. And so how do we pay zakah on those? And then I'll inshallah leave you at the end with just some additional things to consider. So what is zakah and why? And so just going to the basics, what is the literal definition of zakah? Zakah, of course, is a blessing. It's a purification of our wealth. It helps us bless our wealth and protect it from misfortunes. But if we take a look at the technical definition of zakah, which again is what I'm going to be focusing on, it's really about also paying a financial obligation on specific assets in certain ways, considering their amounts and their holding period. So in addition to being a spiritual guideline, it also has a very, very much a scientific aspect to it in terms of how much do we calculate. We're not required to give a lot. A lot of times whenever I'm talking to non-Muslims and we talk about zakah, they say, oh, is it like a tithe? And you have to say it is, but it isn't. It's somewhat very different. It's not just based on assets. There's a mix of based on what you own and your income. So we want to make sure that people are educated about this, because again, you very much want to make sure that you are calculating your zakah correctly. And the importance of zakah, of course, is that it was mentioned in the Quran about 81 times alongside prayer. It's a third pillar of Islam. And very interestingly, we often think about sadaqah and we think about other forms of charity, but zakah really is in a way it's even better than other forms of charity, because it is actually a mandate. So Allah asks us, tells us to do this. And so, really it's something we should be very excited about, because it's a privilege that we have, that Allah has told us is something we need to do. You kind of don't even have a choice. It's kind of a nice thing. So next we'll just inshallah get into some of the basics. Now, who should pay zakah? Zakah is paid by males and females. So again, in Islam, property ownership is owned by male or female. And this is owed by anybody who owns a certain amount of assets that have reached a minimum amount called the nisab. And I'll define what the nisab is. And to meet some other conditions. And also it's only required on those people who are able to pay zakah. So people who are insolvent, they wouldn't be required. People who have a mental faculty where they're unable to do that, they wouldn't be required. And of course, zakah recipients are also specific. So we have a list of the eligible zakah recipients, those being the poor, the needy, those who are employed to administer zakah, those whose hearts are made to embrace Islam, emancipating slaves, the debtors, in the cause of Allah, and the wayfarer. And I know I've seen on MET as well, so I think this ties also into MET about how they also calculate and accept zakah calculations and zakah donations, and then how they use that. So I'm sure they'd be able to talk to you more about that, how they do that. Now, in terms of the zakah conditions, again, just to go into a little bit more detail, the conditions for an individual mean that you have to reach the minimum amount of wealth, which is the nisab, which I mentioned. We also have to see the lapse of one lunar year, and that is called a halal. So these are just some definitions that we're going over right now. We also need to have the complete ownership of assets to a particular person. So, for example, assets that belong to a government or belong to a larger entity, not to a particular person, are not zakatable. Also, assets have to have real or assumed growth, and there should not be any other reasons for them to be unzakatable. Now, that's kind of a broad, I know that's kind of broad in general, but here we can also include insolvency. So what is the nisab? The nisab, again, is the minimum amount of wealth that must be held before zakah becomes liable. So if an individual does not own this minimum amount, there is no zakah that is liable on them. That amount is equivalent to 85 grams of gold or 595 grams of silver. So this year, as of June 30th, that amount was about $4,500. So if you didn't own anything above $4,500 or $4,432, then you wouldn't owe zakah. So again, that helps eliminate people, of course, who are extremely needy from having to pay zakah. Now, the hawl is the minimum amount of time that must pass before which zakah is due. So zakah is due only on assets after the lapse of one full lunar calendar. And at that point, 2.5% is made up. 2.5% is what is the percentage paid on zakah. Here in the U.S. and of course in the West, we often refer to the solar calendar. So in the solar calendar, you can also use a solar calendar, but you need to adjust the percentage of zakah to 2.577%. So again, a good idea is if you're practically trying to calculate your zakah, pick a day. Pick the 23rd of Shaban every year. The 23rd of Shaban is your hawl date, and that year calculate the zakah that is owed on your assets. From a practical perspective, that can make it a lot easier for you, given you may have assets in various locations growing at different rates. And what defines complete ownership? Complete ownership, it means that you have to be completely settled, that you have to have full vesting ability in that ownership of that asset. It needs to be accessible by you. It needs to be disposable by you, meaning you should be able to take the money and also get rid of it, or dispose of it, use it. And it should have no interference with others. You don't have to go through another third party to get access to it. So this is what defines complete ownership. And again, complete ownership is one of the requirements needed before you have to pay zakah on that asset. And again, not liable for zakah when a valid reason exists, for example, being insolvent. So if somebody, if their debt becomes more than what they own, then they also are not liable for zakah. So this is just a little summary of what we just discussed. Again, you want to make sure there's no other reason for you not to pay zakah. The condition for commercial goods is that you would own these goods through exchange, which I'll talk a little bit about more. The lapse of a full lunar year, the nisab or the minimum amount, and the intention to trade. So these are some of the conditions. Now the next question is, on what assets is zakah due? Is it due on everything that I own? So let's take a look at this next. Now, this is a list of zakatable assets. And this is extremely important to know because people often get confused about what do I owe zakah on and what do I not. Gold and silver is zakatable. The Hanafi opinion, again, this is a difference in some opinion. The Hanafi opinion includes jewelry as zakatable, whereas the other madhabs do not. So they exclude jewelry that is not intended for sale. Cash is zakatable. So this includes cash sitting in your bank accounts or elsewhere. Also, assets intended for trade or sale. So if this is something that you plan to purchase, have that property appreciate and sell it again, it's going to be zakatable. And this is where a unique aspect comes in that's different from our taxes. It's the intention. What was your intention for owning this asset? What is the purpose for it? So here, if the asset is really intended for trade or sale, it's going to be zakatable. And also, good current debt is also zakatable. And what I mean by good current debt is if you are a lender and a borrower has paid you back, you owe zakah on that money after they have paid you back. There's also special calculation for livestock, crops, and minerals. And I'll leave it just that they're zakatable, but unless you own, livestock, crop, or minerals, I can inshallah talk about that to you one-on-one. But for most of us, that's not as practical. And what are the assets that are not zakatable? So what are things that we don't pay zakah on? Zakah is not due on, for example, capital goods. So these are your tools, your equipment, things that you use, like for example, a factory. So you wouldn't pay zakah on your factory that you own. You also do not pay zakah on personal use property. So this includes your personal residence, vehicles, clothes, furniture, so on and so forth. You also do not pay zakah on unlawful assets. So you may, for example, if for any reason you have income coming in from a source based on interest, you wouldn't pay zakah on that income. You wouldn't pay zakah, for example, if you had money from theft or bribery, gambling proceeds, financial derivatives, and also life insurance death benefit. And this would be the value of the life insurance, the death benefit minus the excess cash value. So zakah would not be owed on that portion of the life insurance proceeds. The assets intended for retained ownership. And again, this is an easy way to kind of think of two areas. Again, is my intention for trade and sale, or is my intention for retained ownership? And again, assets that are intended for retained ownership, the zakah isn't due on them itself. So for example, real estate property. The investment property actually wouldn't have zakah due on the financial or the fair market value of the property. But of course, zakah is due on the income that is generated by those assets. So that is there's quite a bit of a distinction there. And again, a place where there's often confusion. So I wanted to make sure that was very clear. And I'm going to briefly just talk about debt. Again, it's not a position that many of us are in terms of being a lender, but I did want to address it. And again, this topic is more comprehensive, and I'm just going over some basic ideas here, given the time frame we have. But being a lender, if you have lent money now to somebody, the lender does not owe zakah on the loaned assets until they are repaid to them. So if, for example, if I loaned somebody $100, I wouldn't have to pay $100 on it until they've paid me back. And then you pay zakah only on the assets that you've held for a 1-year period. So again, you don't have to pay zakah, but again, you don't want to. Lending money is not a way to get out of zakah either. So because whenever you become a lender, you do pay zakah on the debt that is currently due back to you. You do not pay zakah again on the amount that has not been paid back. And that amount actually you can deduct it from your Zakatable assets. Now, being a borrower, this might be a little bit more common for most of us. Being a borrower, again, there's confusion often here in terms of if I have taken a loan, can I subtract that full amount from the assets I have? For example, I own, let's say, above the nisab, I own $500, and I have a debt of $600. Right now, only $100 of it is owed. Do I still have to pay zakah on my $500? The answer actually is you do have to, you actually can only deduct the amount that is immediately due. So the amount that is due now, the $100, as of the date of the Halal, which is again the 1-year time mark that you choose, only that amount can be deducted from the Zakatable base, not the entire amount. So having an example here, if you have a home loan with an outstanding balance of $250,000, and as of the Halal date, the monthly payment is $1,500, then only $1,500 is subtracted from the Zakatable base. So the applications of zakah, I want to get into briefly again. How do we deal with zakah on some of these modern financial assets, for example, stocks and mutual funds? With stocks, we have two types of stocks, and again, this is important to distinguish between them. Often we say, well, I just have a stock portfolio. Intention, whenever you're calculating your zakah, becomes important. Are you holding it for the growth of those stocks, or are you holding it for the income that will be generated from those stocks? Or is it both? Are you holding both types of stocks? So here we've differentiated between growth stocks and income stocks. We'll talk about, now the total zakah again is going to be the zakah that is owed from the growth stocks and the income stocks together. So we'll talk first about the zakah of growth stocks. This is actually a little bit easier to calculate. And these are going to be, again, stocks that you've purchased for the intention of appreciation and trade. So, I bought a stock, I plan to hold it until it goes up, and then I'm planning on selling it. This was my intention when I purchased it. The way that you calculate the zakah for this stock is it's going to be 2.5% of the net asset value. Now, the net asset value is the current value of this stock times the number of shares that you own, as of the date you calculated. So as of the Halal date, which again is going to be that 1 year lunar mark, that date that you've set to be your Halal. So it's simply 2.5% of that. The zakat of income stocks is actually different. These are actually stocks that you've purchased to derive an income. So they may be, for example, for dividends, or again, because you're not planning on just buying them and waiting till they appreciate to sell, you really purchased them for the intention of them generating income for you. And here the zakat is only due on the zakatable assets. It's not due on the total net asset value of the share. So here what we're able to do is we have to figure out first what are the zakatable assets per share. In one company, a company, if you look at their balance sheet and their income statement, you'll see that not everything is zakatable. They have debt on their balance sheets, they have equipment. So there's a lot of things in there which are not zakatable. But their cash and cash equivalents are zakatable. So the easiest way, one of the easiest ways that zakatable assets can be estimated, and again the scholars have come together with a consensus that in many of these things we have to do an estimation. It's very difficult to be precise, but again your intention should be that you're doing this estimation to try to get the most precise numbers as possible. But if you have more data and are able to do something more precise, you definitely should. But for most of us, we don't have detailed access to company records, and basically we have their financial statements, which will tell us the current assets and the current liabilities of the company. So we can calculate their zakatable assets per share by taking their current assets minus their current liabilities divided by the number of outstanding shares. So what that is giving you is an interesting formula. And hopefully what you'll be able to do is you'll be able to calculate the zakatable asset per share here. And then the zakatable asset per share is multiplied by 2.5%. So now you're saying, okay, what is the zakat owned on that share? And then you're multiplying it by the number of shares that you own. So in case I lost many of you at the beginning of this slide, I am going to go over an example that will hopefully make it a little bit more practical and clear. So here I've taken actually Kohl's. Kohl's is of course a company that produces clothes and is a department store. So Kohl's Corporation, many people purchase it as a dividend-oriented stock that produces income. So what I did is I just took a date and we wanted to see what the current assets, the current liabilities, and the total shares outstanding. And you can find this again in the annual reports of these companies. So here are the current assets, about 5 billion, the current liabilities about 2 billion, and they'd have about 251 million shares outstanding. So what we've done is we've actually taken again those numbers and plugged them into this formula. The current assets minus the current liabilities divided by the outstanding shares. And what we come up with is that actually the zakat of the coal per share, when we multiply that by 2.5%, is actually $0.285 per share. That's how much zakat I would owe. And if I owned 1,000 shares of Kohl's, I would multiply that 0.285 by 1,000, and that would be 285 shares. Now the interesting thing to note here is that, for example, if I owned 1,000 shares of coal and the price was at around $50.24, that would mean that I own a current market value of about $50,240 of coal stock. But whenever I look at the zakat, I didn't calculate this by doing 2.5% of the total amount that I owned. Again, we're only calculating it based on the current assets minus the current liabilities, so only on the zakatable assets. So it turns out that I'm only paying zakat on 0.57% of what I own. So it's extremely important here. A lot of people, when they're looking at their stock portfolios, they say, well, I don't want to purchase stocks because, again, I'll have to pay 2.5%, and in addition to fees and expenses, it's an additional cost that they assume in their calculation. And they compare that to real estate, where again, when I talked before, real estate, you don't have to pay zakat on the property itself, only on the income that is derived. But now, when we're looking at these modern financial assets, there's a lot more control. We can create what we might say are zakat-efficient portfolios. People, especially that are in retirement age or they're in an area where they want to start deriving more income from their portfolios. That's really their intention, but they need to keep it liquid. They can do this by having stocks that are owned more for income purposes than for growth purposes. And so the zakat ends up being actually less than the 2.5%. So there's something to be careful about. At the same time, we're not talking about, you want to make sure you're calculating the correct amount of zakat. But Allah subhanahu wa ta'ala also didn't, tell us that we have to pay beyond or an unlimited amount. So it's important to know these rules, where you need to be paying the 2.5%, where you may be needing to pay less. And the last set of formula that I'm going to share with you is about purification. Now, purification is a concept in addition to zakah. Purification comes in because there are assets that we own that maybe we don't intend to benefit from because they may be producing revenue or income from impermissible sources. There may be a small amount of interest that might be coming in. We never intended to benefit from it. That was never the reason we purchased it. There may be a share, for example, that has less than 5% income coming from interest, or an unrelated line of business that is impermissible. So what we can do is we can do what is called purification. Now this works, of course, whenever your intention was not to even purchase that asset for the purpose of the haram income. But again, it's a kind of a way whenever you can't avoid it, but it wasn't your intention. So that purification, the way that you would calculate that, this would be an amount that you would, again, disperse to charity. It's not considered zakat. It is not sadaqah. This is not a form of spiritual benefit, but it is a way to cleanse your mind, to purify it, to redistribute it back to the community, and not benefit from it indirectly or directly. So the way that you actually calculate the purification of a stock, at Azzad, we don't invest in any company that has more than 5% revenue coming from an impermissible source. Again, this may be interest, alcohol sales, gambling, tobacco, so on and so forth. Why 5%? This is an amount that, again, scholars have internationally agreed upon. And in addition to that, companies are not required really to provide information. We may not know if there is an insignificant amount of revenue that might be coming from an impure source. That does not mean that it's okay. That does not mean that we're going to forget it. But it means that we really don't have much choice. Our intention was never to benefit from it, and we're going to purify it. So for our clients, for example, we calculate this purification number for them. We let them know exactly what would the purification amount be on the portfolio that they have with us. And the way we do that is we actually have to accrue day to day for 1 year how much that stock was generating in net income that would be about 5%. We assume that up to 5% may be coming from an impure source. And we accrue that every day of the year. And then at the end of the year, on the day of the Halal, we accumulate that and when we look at the summation. So this formula actually, if anybody's into math, it will actually give it to you more clearly. But that's the idea of how you do the purifications. And we also get questions about what about other securities that I might own? I might own mutual funds. I may own bonds. I may own options and futures. Now for bonds, conventional bonds that generate, again, income that is derived from lending-based, and is interest-based, there is zakat due on the principal. So the amount that you originally put in on the principal, there is zakat due on that. There would not be zakat due on the income that you've generated from it. Again, if it's interest-based. That would be something you would need to look more for purification. Mutual funds in the same regard. Mutual funds are a little bit harder because you don't necessarily know whether there's a composition of how much bonds, how much stocks, so it becomes a little bit more complicated. And this is really why now, alhamdulillah, as American Muslims, we have more options to invest in mutual funds that are following Islamic guidelines. They can help us calculate our zakah. And it's actually a really important reason why we need to look to these organizations and these options and include them in our portfolios. Options and futures actually are not zakatable because, again, these are considered derivatives and are not considered to be permissible sources in terms of halal investment guidelines. And employee stock options are also not zakatable because, again, these are options. I had mentioned earlier, ownership is a requirement in order to pay zakah. So if it's an option, you actually don't own the zakah, those shares, yet, so they're not zakatable. Next, I just want to talk about the zakah of securities accounts. What type of accounts we owe zakah on. For example, for non-taxable accounts, like for example, Roth IRAs or Coverdell accounts, these have full ownership. Coverdell accounts are college education savings accounts. So in this aspect, they're non-taxable. I can take the money from them. So these are going to be zakatable. But we also have to look at if there are going to be any penalties associated with taking the money. Zakah is not due on the asset except what is available to you after taxes and penalties. There's also tax-deferred accounts like IRAs, SEP IRAs, 401ks, simple IRAs. So again, do you have full access to the money or not? There are also taxable accounts, regular investment accounts, minors accounts, and also there may be non-taxable accounts that you may have, and how do you deal with those? 401ks, for example, we get a lot of questions about that. So when it comes to IRAs and retirement accounts, an easy way that I like to distinguish them is whether you have complete ownership or not. There is a difference between IRAs and 401ks. So if you look at the rules, IRAs, you can actually take money from them, but only after taxes and penalties. They're individual retirement accounts. You can access the money at any point. 401ks and 403bs, on the other hand, you cannot. They require a departure from employment before you can actually take the money and control it. So when it comes to being a participant of a 401k plan, there's incomplete ownership and they're not zakatable. For IRA accounts, there is complete ownership, they are zakatable, but it's only on the amount after taxes and penalties. This also applies to individual accounts, joint accounts, trust accounts, children's accounts, and college savings accounts, again, after you pay the taxes and penalties. And in terms of incomplete ownership, one thing also in addition to 401ks and 403bs would be pension accounts. Again, retirement assets that you can't access until you retire. So if you're not retired or you aren't able to go and take the money, again, you're not completely vested, and so you don't have, or even if you're completely vested, but you don't have complete ownership, you don't pay zakah on those assets. People will ask us, well, I have an option to take a loan from my 401k or my pension account. And although you have the ability to take a loan, you still don't pay zakah on it. For real estate, just to touch on this topic briefly again, there is also undeveloped land that you may own and developed land. And we go back to the concept of intention. Was your intention to purchase this for income, if it's a developed property, or was it as a property that you purchased for the intention of trade and sale? Again, trade and sale is zakatable if it's purchased for the intention of ownership and retained ownership or income. Then zakah is only due on the income. Cash accounts, checking accounts, and savings accounts. Again, the 2.5%. We get a lot of questions, for example, about salary. Well, what do I do about my salary? I'm getting a certain amount that's coming into my checking account every month. It's a little bit more complicated, and so for the sake of time, I'm not going to go into the details of calculating zakah on your cash accounts. But again, here is where it's extremely important to make sure that you're calculating, you have a halal date, meaning a date where you're calculating your zakah every year, and you're keeping track of that. So you don't want to ignore additional cash that you have sitting in, again, cash accounts. To leave you with some additional things to be considered, money can be given in advance for zakah. So people often ask, well, I don't want to wait till, the end of Ramadan. I mean, it's a good time to give, but I feel like there's a need or there's something I need to be given that I need to give zakah for. You can actually prepay zakah. So if you're calculating your zakah every year, you can actually prepay and just keep record, okay, this is how much zakah I've already paid of what is due. And it can be later on adjusted for the exact amount. Now, what if you have unpiled zakah? There are years where you missed the zakah. If you've missed paying your zakah for specific years, regardless of how many, it is extremely important, of course, that you make up the zakah for all of those years. There's also no double payment of zakah. So the Prophet Muhammad ﷺ said, no asset is liable for zakah twice. So once you have paid zakah on an asset in one lunar year, you are not obligated to pay zakah on it again. Zakah also must be paid when it becomes due. And it is considered sinful to delay that payment. So that's why we talk about the concept of trying to prepay your zakah. And zakah due after death. So the person who dies and still owes zakah, his heir should pay zakah on the amount that he owes. Now, this is just, I wanted to bring up one of our funds here, the Wise Capital Fund, as an example for when you calculate your zakah. The Wise Capital Fund is the first halal fixed income fund that is available in the US. It's investing mainly in Islamic bank deposit programs and sukuk. And sukuk are known in the West as Islamic bonds. So again, these are vehicles that generate income but away from interest-based lending. Now for this fund, for example, when we calculated the zakah on it this year, only 67% of the fund was zakatable because it is an income-oriented fund. It is a halal fixed income fund. So it's extremely important to understand how you've divided your investments between income and growth, what the intention of your portfolio is for, and to be able to calculate zakah on it accordingly. And I have more information about this fund and our other fund as well, which I'd be happy to talk about later. So with that, I will wrap up my part of the presentation, but I wanted to make sure that I touched on some basics. Again, this is a very comprehensive topic. We could be talking about this for the next several hours. So I don't want to keep you from your dinners, but I thought I would leave enough time. If there are any extra questions, of course, I'll be available afterwards as well.
Okay, I have a question. Would you please tell us a little bit more about the two funds that your company has, and also how you assist your clients to calculate the zakat on these funds, and the conditions for, is there a minimum amount, those sort of things about the two funds.
Sure, the question was about some of the investment products that we offer at Azzad Asset Management. We do offer two mutual funds. Again, like I said, they are available for most of your brokerage platforms. My understanding, for example, those of you that may work at Intel, it's available through your 401ks there. The first fund that we have is the Azzad Ethical Fund. It is a growth-oriented fund. So when we were talking about intention, the intention again is to purchase it for the appreciation of the stocks that are in the portfolio. The fund actually is a mid-cap fund, which means that it invests mainly in mid-sized companies. It can be a great way to further diversify, especially if you're investing in other Islamic funds like the Amana funds, but you want to have exposure to mid-sized companies. And the minimum for that is $1,000 if you come through us, but of course, like I was saying, you can purchase it directly from your own platforms like Vanguard, Fidelity, Charles Schwab, so on and so forth. And if you have any questions about whether it's available or not, you can always ask me. In addition to that, we have the first halal fixed income fund. Now, this is a fund that has attracted a lot of interest because, again, there was no fixed income alternative available to American Muslims in the form of a mutual fund. Most people, when you comprise a portfolio, you start looking at bonds. When bonds, again, are generating income from an interest-based source. So what the Wise Capital Fund does, and I'll bring this slide up, but it's the front page of our fact sheet. The Wise Capital Fund actually is investing in Islamic bank deposit programs and sukuk. And like I said, sukuk is kind of known in the West as an Islamic bond. But what it's doing is it's generating income on a fixed basis, not guaranteed. So that's why it is a Shari'ah compliant vehicle. It's not guaranteed, but it is fixed. The fluctuation of the fund is much less than what you would see in an equity fund, in a stock fund. So for somebody who's looking to generate a return, they want something that isn't going to, drop on them suddenly a lot. This is a good alternative. Year to date, looking just in September 30th as being, the 1 year mark, being the year to date, the fund generated about 4%. So it actually did better even than its colleagues, as you would say. If we compare it to the benchmark, which is the Bank of America, U.S. corporations and government short-term bond for 1 to 3 years, that only did 1.28%. So it's a good option. It's a good alternative that's available out there. Again, it's available on many of your brokers. If you want to come and buy it directly from us, there's a minimum of $4,000 initial investment. But again, most people are purchasing the funds directly through their existing broker dealers. And the zakah, the question was, how do we help our clients calculate zakah? Again, if you have purchased the fund directly through us, we can easily calculate it for you. If you have not purchased it directly through us, for example, you purchased it through your own broker-dealers, you can always call us every year. We always calculate the zakah due on the fund on the 23rd of Shaban. So right before Ramadan begins, that's the day we've just kind of made it a corporate date, that our Halal date is the 23rd of Shaban, and we calculate how much zakah would be owed per share. And we can help you then calculate what would be owed. So for the first fund that I mentioned, the Azzad Ethical Fund, it's simply 2.5% because again, it is a growth-oriented fund. The intention is for trade and appreciation. The Wise Capital Fund, because it's a fixed income fund, the intention is for income. The zakah percentage will be different, and we can let you know that every year. Any other questions?
Do you have some applications available for us?
Sure. Anybody who's interested, I didn't bring any hard copy applications, but I do have hard copies of are the fund fact sheets. So if you want to know the rates of return, what's in the fund, so on and so forth, I have the fund fact sheets here. You can again leave me your contact information. I'd be happy to get in touch with you, email, phone call, and set up a time to speak with you more about your investments. And you can also go to our website. That's kind of the easiest way to where you can get applications, more information, and that is simply azzadfunds.com. So if you go there, it'll give you additional information about halal investing, plus more information on these two funds in the applications as well.
Are the funds guaranteed?
That's a good question. The question is, are the funds guaranteed? No, they're not guaranteed. They can fluctuate. You can lose money. So with for example, the Wise Capital Fund, it is, like I was saying, a halal fixed income fund. Now the main difference here with halal investing is that, again, we have to involve an element of risk sharing. So we don't have this concept of guaranteed. The guaranteed would mean that there is no risk involved on one party, and that's where interest-based lending borrowing comes from. From interest-based lending borrowing, for example, if I'm a lender, my idea is that I'm going to be getting a guaranteed income coming in on that income, whatever that interest payment is. It's guaranteed that I keep getting. Now, there are situations where somebody may default. If they default, I still continue to accrue money by the mere passage of time. Basically, nothing has to happen except time passing, and that means that I should be accruing more money. That's where interest-based lending differs from this. So interest-based lending, that's why it's impermissible. It's basically the accrual of money by the mere passage of time. From Islamic finance, the idea is money should be used. So somebody was asking me also about zakah. Zakah really, if you look at it from a business and an economics perspective, it's really encouraging assets to be pushed into use. So for an investment that is a halal investment, there should be risk sharing. There should be some element of risk that the investor also takes in the project, in the company. So when we look at, for example, the ownership of a Wise Capital Fund, which is a fixed income fund, we're investing in Islamic bank deposit programs. So these are Islamic banks. For example, we have a large percentage in Turkish banks because actually Turkish economy has been doing very well. And in these banks, what they're doing is they're called participating banks. So even in a secular country, they don't call them Islamic banks, they call them participating banks. And the reason they're participating is they're engaging in contracts that follow, again, these Islamic finance rules of financing, but not through interest-based lending. And we're also investing in sukuk. Sukuk is, like I was saying, what they call in the West an Islamic bond. The reason they call it that is because the transaction ends up looking like an income stream coming to you, but rather than it being on interest-based borrowing lending, it's actually based on the ownership of a certain asset usually, and a lease payment stream coming through. So in the same situation, there can be instances of default, but you are not gaining money by the mere passage of time, which is interest-based. So just, that was a long answer to your short question, but no, they're not guaranteed.
Thank you.
Any other questions? Well, I'd like to thank you again. Again, I'm going to be here. I do have information if any of you are interested. And if you do sign up and give me your email address, I can send you our guidelines, which talks again a lot about the details that I went over in the presentation. So thank you again very much. I appreciate the invitation.